Good morning. It's Market Day Report. We're glad you're with us here a day after a big WASDE report. Let's jump into the markets. We'll start with corn and the overnight trade. What was happening in the overnight trade? Well, how about we switch and move over to soybeans? There you go. Soybeans moving higher in the overnight session. Corn market moving a little higher as well. Brian Hoops, Midwest Market Solutions. Brian, big report. What thoughts do you have this morning?
Yeah, good morning, Tony. So, you want to talk about the report. It was historic on many, many levels. USDA, first of all, increased harvested acres, planted acres, much more than what everyone had thought. If you go back to the June acreage report, we saw these acreage numbers. We thought we'd be at least 95 and a half, maybe even challenge the record around 97 million. Well, yeah, the USDA kind of surprised everybody back in June, didn't increase harvested acres near as much as what we had hoped that they would. But yesterday, they surprised people and increased those acres, planted acres, 97.3 million, a new all-time record. And that's going to, certainly weigh on the trade. Since 2005, the USDA has actually changed planted and harvested acres from the June report into the August report on 4 different times. Yesterday was the 5th time, and it was in fact the only time they've increased acres from June into August. The other 4 years, they all lowered those acres. So that was a big surprise. The yield numbers coming in so aggressively higher, I think caught everybody off guard. That was 7.9 bushels per acre increase over the last month. That's a very aggressive approach. USDA has, over the last several years, been very, very cautious about increasing yields, decreasing yields. They've only done it meager amounts at one time. So that was another big surprise and really pushed corn sharply lower. On the flip side, because we planted more corn acres, you had less soybean acres planted, the smallest soybean acres since 2019. Even though you had a new record yield for soybeans, the smaller harvested acres took away over 150 million bushels of supply, a pretty sizable amount, and we pushed sharply higher. Now, the question is, where do we go from here? Well, we're higher overnight. A lot of times it takes at least 3 days to kind of get the market to acclimate to these new fundamentals. So I would say today is at best day 3. We had, Sunday night, President Trump's tweet that gave us sharply higher prices into Monday, Tuesday higher prices. Today is day 3. Maybe we have another day up, but we're starting to run into some resistance in this 1044, 45 range. 1051 is our next resistance point.
Yeah, and we're just looking at the quotes as they come up. Again, was a big session yesterday for soybeans, and as we look at the intraday on that November contract, was pretty impressive as well, how we rallied from under that 1038 level. Okay, hey, Brian, let's take a quick break. When we come back, we've got livestock futures to talk about. Market Day Report continues in a moment. Now, you might have thought that the really only story we were following yesterday in the markets was that WASDE. But, with the fall in the corn market and the rise in the bean market, what happened in livestock markets? How about live cattle futures? As that went higher, up 267 on the August at 235.75, and then 229.25 on the October, as it was 315 higher. Over to the feeders before we get back over to Brian Hoops. A $6 gain on September at 346.60, and hogs. By the way, live and feeder cattle 2 days higher in a row, so 2-day rally trying to make it 3. Hogs were lower in the trade yesterday. All right, let's go back to Springfield, Missouri. Brian Hoops, Midwest Market Solutions. What are you watching in the livestock?
Well, the big things to watch are the cash markets here. Yesterday, we saw Oklahoma City auction take place earlier this week. $3 to $12 gains in most of their cattle that were sold. Some of the less than 800-pound weights didn't quite sell as strong, but anything heavier than that, there's still really strong demand for them. The big move yesterday in the live cattle occurred when the midday box beef numbers came out. They were sharply higher. And I think that caught the trade off guard. We certainly were surprised, and we saw a big rally start when that happened. They closed sharply higher again, over 850 higher in the choice, and select was over $5 higher last night. So we can expect more strength on the opening here this morning. That really helps the packer margins. Now they're about $100 ahead in the red instead of $300. They should be able to pay higher for the cash markets this week. Feedlots know that they'll be holding out for much stronger cash trade this week. So we're looking at additional gains, I think, in both the live and the feeders, looking for stronger cash trade. Won't see it today, probably see it Thursday or into Friday afternoon.
So, Brian, as I look at the choice select, and oftentimes we'll talk about the spread. I remember years ago we'd talk about a spread of, $3 or so. That spread is really spread out. What, $25? Is that right?
Yeah, it certainly is. It's pretty wide between the choice and the selects. Usually you don't see it that wide. It's probably disparity on what we're selling, the consumer demand, and what they are actually looking and searching for. Yesterday, USDA also updated beef and pork production numbers in that WASDE report. We generally don't talk about them a lot, but I thought it was interesting to note that they are reducing their beef production numbers by 260 million pounds this year and another 360 million for next year. So they have production falling even further, and with the high tariffs of Brazilian cattle, it doesn't look like we're going to be importing a lot of beef anytime soon. So this just keeps the supply issue very tight for our U.S. economy and our U.S. consumers.
Exactly, Brian. Brian Hoops is with Midwest Market Solutions.